Howdy, folks. Welcome to Liberty Call. Today is Friday. Woohoo! May 10th, 2024. It is the 27th anniversary of my last day in the Navy. So May 10th, 1997 was my last day as a active duty service member. Seems like just a few days ago. So anyways, if any of my Navy buddies are out there watching this, hope you're doing well. And anyways, it is an overcast and yucky day here in Colorado. Reminds me a lot of winters in Texas, especially along the Gulf Coast where it's gray and overcast and not too cold, but it's chilly. So if it is your first time watching Liberty Call, I'm glad you are here. If you could give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. All righty, well, let's go ahead and get into today's markets, see how they turned out. Dow Jones, gosh, why does it always pop over there? Dow Jones was up 0.32%, 125 points, closed at 39,512. S&P 500 up 0.14%, closed at 5221. NASDAQ down 0.03%, closed at 16,340. The VIX was also down again today, 1.02%. It's at 1256. Canada down 0.3, Brazil down 0.46, and Mexico down 0.24. Over in Europe, Germany was up 0.38%, the UK up 0.63%, France up 0.388% also. Netherlands up 0.71%, Spain up 0.5%, Italy up 0.93%, Switzerland up 1.31%, and Portugal up 1.15%. Russian exchanges both in the green today. The MOEX up 0.5%, the RTSI up 0.15%. And the Asian markets, starting out with the Nikkei in Japan, it was up 0.49%. Australia up 0.35%. New Zealand up 0.09%. In China, the Shanghai was flat, up 0.01%. The Shenzhen component down 0.58%. China A50 up 0.04%. DJ Shanghai up 0.05%. Hang Seng up 2.3%. And the Taiwan weighted has not been open since the 7th. All right, so it looks like the markets were fairly subdued today. I mean, there were a few big jumpers, but here in the Americas, everything was fairly flat. All right, let's hop over to the weekly chart and see how things finished up. Starting out with the Dow Jones, looks like it's going to finish the week up about 1.91%. The S&P 500 finishes the week off about 1.54% up. The NASDAQ composite finished the week up about 0.78%. The Dow Utilities finished the week up about 2.87%. And the Dow Transports finished the week up 1.22%. So looks like everything is, let's zoom out. Let's go out to the bigger chart and go back to the daily. See what's happening right now. So let's go back a couple of years and see where everything kind of starting at the beginning of 22. We were in a long downtrend through most of 22. 23 was sideways most of the year. And we did have a bit of an uptrend going into the beginning of this year. Broke that trend in, when was that? About early February. And we've been just kind of sideways ever since. So that's kind of, let's look at the other charts, look very, very similar. They're all basically trending the same way. So everything looks like it's kind of sideways. I mean, we had a down year in 22. We had, kind of a sideways and up year in last year. And then this year's been mostly sideways. So what's going to happen? I don't know. I mean, has the steam ran out of all the economic stimulus that the government provided to us, which has been such a help? I mean, I know I love inflation. All righty, let's go over and get over to the economic data that came out this week. It was a pretty light week as far as numbers. Initial jobless claims came in at 231,000, which put everyone in a good mood because they were hoping that the Fed's going to start lowering rates, that the jobs numbers are ticking up. I would say until consumer spending starts, tipping over or trending down, that I wouldn't really put much weight into the jobs numbers yet. The forecast was 212. Like I said, it was 231 was the actual number, and last week's number was 209,000. Continuing claims came in at 1.785 million. Forecast was 1.79, so just 5,000 under forecast. And last week's number was 1.768 million. The Federal Reserve's balance sheet is at $7.353 billion. Last reported number was $7.362 billion, or the trillion. I'm sorry, $7.353 trillion. The B is, never mind. Doesn't matter. Anyways, the balance sheet is slowly trickling off. If you remember from covering the Fed meeting last week, we talked about how the Fed was reducing the amount that they were allowing to roll off their books. I personally see that as not the greatest thing, but is what it is. The Michigan Consumer Sentiment survey came in at 67.4%. The forecast was 76. So and last month's number was 77.2. So a pretty big jump from the last few months, which have been in the high 70s down into the high 60s. So we haven't been down this low since, what was that? December of last year. And yep, that is everything there. So let's go ahead and get to the article I want to get to. All right. So that's all the economic data this week. Today's market recap: U.S. stocks set for weekly win, but gains stifled by Fed speak and inflation jitters. All right. U.S. stocks saw mostly positive movement on Friday, with major indexes, poised to end the week with gains between 1% and 2%. The market was bolstered by a wave of upbeat quarterly earnings reports, although lingering concerns about persistent inflation tempered hopes for near-term interest rate cuts. Consumer sentiment took a hit, as reflected in the University of Michigan Survey of Consumer Sentiment Index for May, which dropped to 67.4 from 77.2 in April. This decline coincided with a notable increase in one-year inflation expectations, rising to 3.5% from 0.4% the previous month. Federal Reserve officials, including Minneapolis Fed President Neil Kashkari, have been cautious about the possibility of rate hikes, suggesting a wait-and-see approach. Yeah, personally, I would put a higher probability on rates going up a little more than a rate decrease this year. Again, that assumes that we don't have a market collapse or some sort of, massive drop in the economy. So, all right, earnings season concluded on a positive note, with several companies delivering strong results. Sweetgreen Inc. notably stood out after raising its full-year guidance and reporting better than expected quarterly performance, leading to a more than 30% surge in its stock. Taiwan Semiconductor also made headlines with a 60% year-on-year revenue increase in April, highlighting robust demand for AI-related hardware. However, not all earnings reports are positive. Akami Technologies disappointed with its guidance, causing its shares to drop more than 10%. Unity Software also fell significantly after missing earnings estimates. In the pharmaceutical sector, Novavax experienced a substantial surge following a deal with Sanofi to develop a COVID vaccine. Really? Are people still taking those? While Moderna faced a decline after FDA delayed approval for its respiratory syncytial virus vaccine due to administrative constraints. Sorry if I SYNCYTIAL, syncytial. I have no idea what that is. Who's taking vaccines? Seriously. Eat right, get sunlight, exercise, you'll be fine. Overall, more than 80% of S&P 500 companies have reported first quarter results, with earnings on track to grow by 7.8%, surpassing earlier expectations. Despite inflation concerns, the positive earnings momentum has contributed to the market's upward trajectory throughout the week. Alrighty. And it's also been kind of a light day on actual articles to cover, so I had to, kind of dig through and find some stuff to talk about today. All right, next up comes from Mises Wire, The American Labor Market, Fact or Fiction. This was written by Jacob Swartz. See what Jacob has to say. Excuse me, I was drinking some root beer earlier, the bubbles. All right, the labor market stands as the cornerstone of all economic activity, underpinning commerce and industry by providing the essential workforce needed to produce goods and services. In today's environment, where everyone seems to have an opinion on economic matters, especially people who are not in the economics world, many fallacies persist about the historical role of the American labor market from the Industrial Revolution to present day. Critics often misinterpret the impact of industrialization during the Gilded Age, blaming industrialists for exploiting workers and perpetuating income inequality. I would argue that the industrialists actually provided a labor source that people could lift themselves up out of poverty. A lot of people went from an agrarian lifestyles to more of an industrial lifestyle. Granted, working in those factories back, 100 plus years ago was not exactly the safest. It's kind of like in the military. I look back at the sailors who served back in the 30s, 40s, 50s, and, doing the job that I did as a airframe mechanic. And, they're up on there on a flight deck, no cranials. They just got like rags stuffed in their ears. It's like they have like no protection on. Well, why? Because, they didn't know. And, like they told us, back in the 90s that, all of the, all the safety procedures, those are written in blood because, I've got scars from my time in the military from bumping into stuff when I wasn't wearing my proper gear. So anyways, all right, let's dive a little back into this. However, Nobel laureate F.A. Hayek dispels these myths in his book, Capitalism and the Historians, revealing that the rise of large corporations and industrial centers did not lead to widespread exploitation. Instead, the shift to urban centers was voluntary and driven by improved job prospects and better living conditions offered by growing labor markets. See, no one's forcing anyone to do anything. If you go work in a car factory and 20% of the people are dead within a year, maybe you rethink whether or not it's worth it. But if the money's good, it's kind of like being a roughneck out on oil rigs and, or out in the Gulf, working on the platforms out there. It's dangerous, but they get compensated for that danger. So, it's, again, if no one's forcing you to do it, you make that choice. No one forced me to be an airframe mechanic in the Navy. I voluntarily chose it because it seemed a little bit on the risky side. Contrary to popular belief, the wealth generated during the Industrial Revolution did not solely benefit the elite. The emergence of innovative industrialists and technological advancements led to increased demand for labor and higher wages, improving the economic standing of unskilled workers. Hayek challenges the notion that labor unions were the primary drivers of improved working conditions, arguing that private industry played a more significant role. Employers recognized that treating workers well was conducive to productivity and economic growth, implementing reforms like shorter work weeks and benefits before legislative mandates. You could look at Henry Ford. He paid his people very, very well because he wanted quality workers to build quality vehicles that he could sell. And he had a lot of rules. It wasn't just what you did on the job. They wanted good people working for him. And, you could argue, well, you're not paid to be a good person. Well, if I'm an employer, I make that decision of who I want working for me. Historically, labor unions often resisted technological progress that could enhance worker safety and efficiency, seeking to control job conditions to the detriment of labor markets. While unions contributed some improvements, their impact was overshadowed by transformative changes brought by private industry and entrepreneurial innovation. In summary, Hayek's insights provide a nuanced perspective on the relationship between industrialization, labor markets, and societal progress, rather than viewing the Industrial Revolution through a lens of exploitation and hardship. Hayek emphasizes the collaborative dynamics between employers and workers that shaped the modern labor landscape and contributed to economic advancement. I'd argue that labor unions are basically just small little governments that are corrupt as our governments. Everything from my local county right here in Douglas County, I imagine they're as corrupt as it can get. I've seen the school systems and all the crap that goes on there. Obviously the state governments, Colorado, it's got its flaws. And then the federal government, which, my opinion is just gangsters with badges who, use us as tax cattle so that they can exploit us and, line their own pockets. Anyways. All right. One last article here. Ooh. More potential bad news. FDA preparing for possible bird flu spread among humans. Commissioner. Yep, it's election season. They got to come up with a new super flu so that we all have to stay home and can stuff the ballot boxes. All right, let's dive into this one. The U.S. Food and Drug Administration, yeah, I trust them, is preparing for potential spread of highly pathogenic avian influenza, H5N1, among humans, according to FDA Commissioner Robert Califf. Although the virus has been primarily affecting birds and cattle, with limited transmission to humans, officials are taking precautionary measures in the case the virus mutates, becoming transmissible to humans. Well, maybe keep Dr. Fauci away and we won't have this problem. Dr. Califf highlighted that the primary concern is that if the virus were to infect the human lungs, potentially resulting in a mortality rate as high as 25%, based on past outbreaks in other parts of the world, while genetic sequencing suggests a low risk to humans, currently experts remain vigilant given the virus's potential to mutate. Again, keep it out of Wuhan and out of Fort Detrick and all the places that our government does this risky business behind the scenes and doesn't tell us. Maybe we won't have these problems. Since 2003, the World Health Organization has recorded 889 confirmed cases of H5N1 globally with a mortality rate of 52%. Well, maybe they have weak systems. WHO scientists have expressed concerns about the virus evolving into a pandemic that can spread among humans. The FDA and other agencies are closely monitoring the situation, particularly in cattle herds across multiple states where H5N1 has been detected. Cattle have been identified as potentially mixing vessels for avian influenza due to receptor expression that could facilitate viral adaptation. To mitigate the risk, measures are in place, including mandatory testing of cattle before interstate movement, protective equipment for farm workers, and surveillance to ensure the safety of milk and milk and beef supply. Testing has confirmed that despite some positive samples, the milk and beef supply remains safe for consumption. The FDA's proactive approach underscores the importance of early intervention to prevent potential virus mutation to human transmission. While the current risk remains low, the preparedness and surveillance efforts are critical to safeguard public health and prevent further spread of avian influenza. I know there were some articles 3 weeks ago, about having fragments of the, I guess it was the bird flu in, I guess it was chickens, beefs, I don't know, some sort of agricultural product. Well, here's what happens is that they take all the dead animals and byproducts and stuff, and they grind them all up, and that goes into the cattle feed, and I mean, which is banned in other places, but we still do it here in the United States. So if you're getting or just your average beef from the grocery store, odds are that cow was eating ground up whatever, so you're going to get fragments and bits in their tissue just from eating it, and then they do a PCR test and they say, oh well, there's a little bit of whatever in this cow or chicken or whatever. So, but it's just fragments. I wouldn't really worry about it. So I would suggest if you're going to eat meat, go to your local butcher and find out where it's coming from. So that's where, if I eat steaks, things like that, I want to know where it's come from. I go to a local butcher. I've also got a bunch of ranches right out here just outside where I live, so I can go and talk to them if I need, I know where those cows are because I drive past them all the time. So, and I see them eating the grass out in their pasture. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information is there. I hope you have a wonderful weekend, and I shall talk to everyone again next time. If you are still here right now, if you could, give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell. Again, hope everyone has a good night and has a good weekend, and I'll talk to you again next week. Adios.